investors today have, I think, through the advancements of technology, an incredible amount of choice when it comes to investment decisions. I think the old model of, you pay a research analyst a lot of money and he gives you something that you think the rest of the market doesn't know, or an edge, that's gone. Those days are gone. You find analysts today that put out research, and by 10 o'clock, 11 o'clock in the morning, it's in the public domain. It's either tweeted or on Facebook or wherever. The world has just become so small. So what does this mean? It means that investors, a retail investor, has access to incredible amounts of information, but it becomes a clutter because it becomes just so much. And it's a good thing if you are able to funnel out a lot of that noise and concentrate on what are the key points, and look at a long-term strategy or even a short-term strategy, and find what are the things that are going to drive investment decisions. So I think that's becoming more and more critical in today's environment. I think there's a lot of technology platforms and a lot of news engines that will provide you with the news, the research, the ability, like a Saxo platform does, to invest globally. But still, it comes down to, at the end of the day, you as an individual, if you're doing it on your own, need to be able to make that investment decision. And that's always a difficult space to be in. You find people who are very good at that as an individual, and you find people that are inherently very bad at that. And that comes back to the point that obviously the good ones are going to benefit from what's happening technologically and the explosion of information fantastically. And the ones that aren't are going to get bogged down by the noise. And then that comes to the point that from their point of view, the ability to look out or search out investment managers or portfolio managers that are good becomes more and more a metric that you're looking for. And to that degree, I think that there's a lot more accountability in today's world, where investors can go and find out what investment managers are really good at what they're doing, have a concise view, are able to make good decisions, and use technology to an investor's benefit. We believe that there are a lot of fund managers and investment managers out there that make use of technology like Saxo Capital Markets technology, and they provide that interface to their clients. So they are charging for the ability to manage, but more and more performance fee driven. So if you make a performance, you charge for it. And I think everyone kind of agrees with that, If you're not making, if there's no performance, there's no charge. And that, I think, is the accountability that's starting to work its way into global investing. And I think gone are the days where you went and put your money with a big fund manager and they just took a management fee regardless on a daily basis. And I think it also lends itself to being able to say, well, look, I've got the ability to do that with a fund manager, but I've also got a little bit on my own. And with the explosion of global markets, I can have a go on my own. And you either learn pretty quickly if you're good at it, like Jesse Livermore, or you're pretty bad at it, And I think that becomes an overriding factor. But in today's world, I think transparency is the major thing, because people need to know what's happening. The markets and the world is moving so fast from a political, economic point of view, that without that transparency, you're not actually going to get anywhere.